Hi, and thanks for listening to LOQPOD. I'm Katy Ringsdore, and today I'm joined by Max Rofagha. He's the CEO of Finimize. We've been talking about the world's largest investing community and how the landscape of investing has changed. Max, thank you very much indeed for joining me on LOQPOD today. As usual, I really like to start by getting my guests to kind of do a bit of an introduction. So take it away, introduce yourself and Finimize.
Yeah, thanks for having me. So my name is Max. I'm the founder of Finimize, and we're building a modern financial information platform and community for really today's retail investor. So we have a team of analysts who produce really high quality content every single day to help you make smarter investment decisions, and you can consume that content through text and through audio in our mobile apps and our newsletter. And then we have a really, really active and amazing community of people who meet all over the world, now obviously virtually. And last year connected more than 30,000 people that way. This year are going to connect 60,000 people, making us the largest financial gathering in the world, which we're really excited about. And overall, we have more than 1 million members across the world. So that's us in a nutshell.
It's amazing. And you've gone to 1 million customers very, very quickly. How's the pandemic and lockdown kind of impacted your business? Because I'd imagine, investors certainly now, you can't go out to get advice so much. So people are relying on, apps such as yours. How's the pandemic impacted your business?
I think, I guess, two parts to that. So number one, we have multiple revenue streams. So when the pandemic hit, one of our revenue streams we got a little bit worried about because it was advertising. We also have a consumer subscription revenue stream, and that thrived. Luckily, the advertising business ended up working quite well throughout the pandemic, but that was definitely something that we were initially concerned about because obviously a lot of companies started freezing their marketing budget. So that's completely relaxed, and interestingly, we're actually now seeing people spend more than they did before, because I think there was a little bit of catch up to do in terms of getting your brand out there. And then in terms of user behavior, we saw certainly, I think in the beginning of the year, February, March, we saw record levels of engagement. People were really coming to us, we're basically just taking every piece of content we put out there and reading it top to bottom or listening to it start to finish. Because I think there was a lot of noise going on. People were a little bit, perhaps there was a little bit of FOMO going on. People really wanted to be in the know. And so it was really interesting to see how those engagement levels really spiked as a result of everything that was happening around us.
And the content that you share, because I've actually got your app and I'm one of your members, but you've got such a different amount of content on there for various different levels of investment for people that are kind of just want to learn more about, for example, how Netflix works, through to, detailed information around cryptocurrencies, etc. How do you source that level of, quite complex content and generate it so that, people like me can actually consume it in a way that's manageable?
Well, we have, exactly for that, we have a really, really amazing analyst team who we hired, who previously worked in large financial institutions like Goldman Sachs, like Fidelity, like Bloomberg, and they basically they bring all the expertise to the table, and they help us really make sure that we deliver valuable, high-quality content to members like yourself, and that can range. That can really range from throughout multiple topics, as you mentioned, and how we go about then producing that piece of that content is that we try to be very, very community-driven, right? So you could reach out to us either through the multiple channels that we have, or if you're part of some of the community groups through chat groups that we have. We try to be very, very close to these groups and really understand what's top of mind, what do people want to find out more about, and how can we help.
And you were mentioning some of the team that you have there and your analysts. How do you recruit? Because I'd imagine, obviously you guys are a fintech, and coming from some of these big corporations, they've got big salaries. How do you attract talent and retain talent?
Yeah, I think for us, what's really helpful is that we, from day one, have defined a really, really clear mission. And that mission, as a side note, is we want to empower people to become their own financial advisors, because we believe at the end of the day, there's an information asymmetry where the finance industry is keeping up the barriers so that the information doesn't flow into the hands of the end consumer. And we want to change that. And I think that resonates with a lot of people, specifically in the finance industry, interestingly, because they've seen it from the inside and they understand how much potential there is really to change things for the better. And I think that resonates, and people then feel like they want to be part of a larger purpose and a larger mission. And that's, I think, primarily what's allowed us to attract great talent and also retain that talent.
And obviously, with the success, of the business going to 1 million users already, I'd imagine you're on a massive growth mission at the moment. How big's your team at the moment, and kind of have you got big plans to build further?
Yeah, so we've kept things very lean. So we're like 20 something people, and have the way that we've kind of hired is we've really tried to make sure that we think about it a little bit like a sports team, right? So, I mean, football is obviously top of mind with the Euro Cup. There's only 11 players that can go onto the field. And so, you need to make sure that you have the best 11 players. And so we kind of think about that in a similar way. There's certain positions that we need to fill, and can we get the best person to fill that position? And I think if you have that mindset, then you can actually achieve quite a lot with a fairly small team. And that's kind of the philosophy that we've been pursuing. And to the second part of the question, we are continuing to grow. We're continuing to grow across also new functions that are becoming more and more relevant. We're building out our product quite a bit to further help the end consumer make smarter decisions with their money. And so we're really hiring across multiple teams with new functions that are arising to cater to all of that.
Sounds very exciting. And you were mentioning your content a little bit earlier on. I'd love to know, because obviously there's a lot of stuff to kind of read and digest as a consumer. But there is the community element of Finimize. And I'd love to know kind of, are you seeing any kind of trends in questions and concerns from your customers, or is it quite varied?
I think it tends to be, there's like a couple of things that are really top of mind. So whether that's, the beginning of the year, everybody was talking about GameStop, etc. That obviously was top of mind. Then over the last couple of weeks, people have been really concerned about inflation, so that's on top of mind. So there tends to be like sort of a zeitgeist topic that tends to be top of mind. And then I think below that, you have slightly more like niche topics. So some people are really interested in ESG, so like sustainability. Other people are really interested in vegan stocks as a thing. So it can be really, really niche. But we try to cover it all, either through the content that we put out or also through the meetups that we host. Like NFTs was another thing. And so one of our community hosts hosted a meetup all around NFTs and helping people make sense of those. So we try to really tap into what's top of mind for people, sort of broadly speaking, and then also more vertically, what are some of the niche topics that people are interested in.
Yeah, and I suppose you've got varying levels of expertise of these different investors as well, because, if you're kind of low level with absolutely no clue like me, versus people that have been investing for years and really kind of understand it, it's quite a broad demographic, isn't it, that you're appealing to? How, not necessarily based on the feedback from your consumers now, but perhaps in general, how are you seeing the landscape of investing changing?
That's a really interesting one, because obviously a lot has happened over the last months and years, and obviously it remains to be seen what exactly will stay. I think a couple of interesting things that we've observed is, number one, there's obviously been way more retail investors that have entered the market. Just to quote a statistic from the US, in the US last year alone, more than 10 million new retail investors started investing. And if you look at the earnings reports of some of the largest brokerages there, they say that in Q1 alone, they had more new investors come to their product than all of 2020. And so there's this like massive acceleration happening. And the interesting thing about this new cohort and this new generation of retail investors is that they have a different attitude and a different behavior to previous generations. And so to give you one example, they like to learn by doing. And so I think historically it's always been the case that, you need to really read all these textbooks and take these courses and see a financial advisor, etc. But nowadays, with fractional shares, for example, a Amazon share costs a couple $1,000s, but you can buy $100 worth of Amazon share through fractional shares. And so what we're seeing is that people are using these tools to, as I think they would say themselves, get some skin in the game, and that way really pay attention to what's happening, and that's then what will motivate them to inform and educate themselves as they go along. So there's this like learning by doing mentality. And then obviously there's a very different sort of mindset also in terms of what we're now starting to see, for instance, with meme stocks, right? Where there's a lot of emotional components in what's happening there. And I think that's going to be interesting, because I wonder how all of that is going to pan out when the markets start going into the red, which for sure they will do at some stage. That's a given. And it'll be interesting to see how that emotional side of things will develop and if it will persist. I think what will definitely persist is that there's a new kid on the block, and that's this modern retail investor. They will stay for sure. And because of the different infrastructure, like I was giving the example with fractional shares, there's also new behavior that we're observing. There's been a lot of talk, maybe as a final point, in the past couple of years around just really putting your money into passive investments. And I think what we're seeing now is that there's a larger demand for active investing, i.e., not just putting something into a robo-advisor or into a passive fund, but actually taking a little bit more, even if it's just part of your portfolio. It doesn't have to be obviously everything, but even if it's just a slice of your portfolio, taking a more active role. And I think that's definitely something that I would think is here to stay, at least for the next couple of years.
Yeah, and that's really interesting what you say actually about the emotional element of it, because certainly before, I mean, I've not done much in the investment space at all, but now, as you say, it is far more emotional, and it will be fascinating to see kind of how that changes. And obviously with that, emotional side of things and the community element of what you do, how do you kind of see Finimize changing and evolving over the next, 3 to 5 years?
So, as I said at the start of our conversation, the way we kind of think of ourselves is as this platform and community for the modern retail investor. And the way that we view the market is that there's been a lot of innovation through infrastructure and tools, paying zero commission when you go to a brokerage. That's reduced barriers to entry. Fractional shares we talked about, that's reduced barriers to entry. And so I think if you think about it like on a holistic level, access is a key term, right? Like phase one of democratizing financial markets has been all about access. And I think there we've seen a lot of innovation. I think phase two is going to be all around getting access to information and getting access to high quality information. Currently, there's I think a big vacuum there. And that's why we're seeing the rise of these pseudo finance gurus that are popping up on YouTube, on TikTok, on Reddit. And I think that's really phase two, and that's where we want to play a major part in.
And how do you know, as you were saying there, there's a lot of information out there. There are a lot of people claiming to be experts in, financial advice, etc. How do you know kind of what content to trust? And is an element of it kind of a bit of gut instinct, or, is there more of an educated approach you should take to, and I'm talking from a consumer's perspective now, when I'm watching or listening to something, how do I know what to actually take advice from?
I think that's a very good question, and I think it's not an easy one to answer. I think the way I would think about it is, and the way what I would recommend people think about it is, think about the incentives that the person or the company has who's producing the content, and are those incentives aligned with you? Let me give you a couple of examples. Number one, you type into Google, I don't know, what are some of the best brokers, or which ETF is good, where should I put my money into? And then you come to a free website and you might see a bunch of ads on the website, and then they have a list and a comparison. Are they doing this just to be altruistic? Probably not. In reality, a lot of these websites that you find through Google are heavily optimized for SEO, so search engine traffic. And they then make their money off the back by introducing you to a broker or to an ETF, etc. And they then get either a referral fee or cut of the transaction. So they're incentivized for you to take action, even if that action is not necessarily the best thing for you. The other thing is, what you're starting to see is that brokerages, investment platforms, are trying to now get into the information space and education space. And so again, are they doing this to be altruistic? Probably not. They're doing this because they make their money the more active you are on their platform. And so if they can tell you, oh, this just happened, you should now buy into this or sell this, they're going to make money by you transacting. And so I think it's always thinking about, what are the incentives for why is someone providing information to you, and asking yourself the question, are those incentives aligned with mine?
Yeah, that's very well rounded actually, because it's so difficult because there's so much information out there. And Max, if somebody's really start out to manage their own money at the moment, and they're looking for kind of guidance, what would be your personal advice to people that are kind of just starting out on their investment journey?
Yeah, I think I'm obviously very biased, which would be to get Finimize and get very involved in the community, because I genuinely think specifically the community part is really valuable when you're starting out, because you can surround yourself with people who not only are just getting started like yourself and can share tips and feedback, but also people who have gone through what you're about to go through and who can share their learnings with you. And so you can obviously do that with Finimize, but you can maybe, if you're lucky and you have friends who are into investing, I would definitely ask them about their learnings, and are there any sort of mistakes that you can avoid that they did. And then, like I said, I think there's very little barriers to entry these days to getting started. And just put £50 into a brokerage account and get started. Is certainly one way to do it. You're not going to get rich from it, but you're also not going to get poor from it. And at least that way, like our community members say, you have skin in the game, and you can start to follow what's happening. And that way, learning by doing, start to build up your knowledge, get a bit more comfortable with this whole very mysterious and sometimes convoluted world of finance. And then you can start to up your information level a little bit more and start getting a bit more serious.
Yeah, and you're right. And the peer-to-peer stuff's really important, because I think, I've had this conversation with a couple of guests in the past, but I found it so interesting that, when I was younger, talking about money and investment, you didn't really do it. It wasn't really appropriate to talk about money. And as soon as a friend starts to talk about investing, you'd think, whoa, they've come into the big bucks. They must be doing well. Whereas now, like you were saying earlier, Max, I think pretty much anybody can get involved now. If you've got a little bit of a surplus, you can get involved quite easily. How have you kind of seen the emotion and the attitudes towards discussing money, and certainly around investments, change in kind of your history?
I think people have become a lot more open about it. If I look at our community, people are very openly sharing what they're investing in, even how much they're investing in it, either because they want to show to other people what they're doing and perhaps be an inspiration, or because they want to get feedback. I think a couple of years ago, people were certainly in Europe, I think people were very closed and a bit reserved about sharing too much information around this topic. I think that again, as the access has broadened, I think that has changed. which I think overall is a good trend because, at the end of the day, we're all in the same boat. And the more transparent we can be, the more we can help each other, and the better it is.
I couldn't have said it better myself. Well, Max, thank you so much for joining me on LOQPOD today. It's been really great to speak to you and to learn more about Finimize. Thanks for your time.
Thank you very much.